either implement or understand how to implement issues related to compliance monitoring in crypto assets and digital assets.
It's an amazing blend of a kind of background of experiences that you have, having been both in-house and with the regulator, and it's something that not many people in this industry actually have exposure to. Given the fact that, I know maybe before we jump into kind of asking questions about, you know, blockchain analytics and regulation, what is it that you do at Global Ledger? What is Global Ledger actually functioning as, and what is your role within the market?
Absolutely. So Global Ledger is a leading blockchain analytics solutions provider. It has a very beautiful platform showing regulators and financial institutions what their risk exactly is when it comes to interacting with crypto assets.
Yeah.
And we also do consulting services. We help regulators, supervisors, as well as the private sector to answer their specific targeted questions. And examples include like tax authorities wanting to know how much crypto-related income is generated in their jurisdiction by specific players in the crypto sector. So we do these kind of things, and the role is quite broad. You're right that my broad background helps me kind of jump in and help different sectors of the market, but also different teams within the company, but primarily working with regulators and supervisors to help them know how to supervise and regulate crypto assets and digital sector in general, but also understand the technology. As you were saying before, I think it's quite close to your heart, right?
Well, I know that was exactly going to be my question. How much of your role is actually education before advisory? So obviously, you know, we're entering into a new realm of technology now in our field, where the future of not just risk management or compliance, but risk management is data-driven, and it's going to be tech-driven. And you know, my concern at the moment is there's a massive educational need, both within the private sector and the public sector, to understand what we need to do in order to meet those challenges. And in today's first session on the stage, it was the future of, you know, AML and AMLA, the role of AMLA, which is based here in Frankfurt. Apparently it's day 66 of AMLA. But you know, people were saying about the fact that we were waiting for a release of some UBO regulation from the Commission. But before we even jump to new regulation, we need AMLA and obviously the Commission to align on their mission and their partnership and their strategy. But that also involves understanding technology, because I think one of the biggest challenges they will have, first and foremost, is harmonizing the FIUs in Europe, which is going to require a significant investment in data analytics and also in technology to understand behaviors and look for complex networks. So my concern sometimes is that we need to do much more education before we can start advisory. And again, you work with obviously digital assets, the understanding or the lack of understanding of what blockchain analytic capabilities are, the anonymity of digital assets versus personams. Are you having to go back to basics quite a lot on explaining, or are you finding the education is there and that there is a lot more appetite within both public and private side to become more educated in this space?
So I would agree with you, education is absolutely essential, but I would also say that countries are somewhere on the spectrum.
Yes.
From like very nascent stages of regulating crypto and or starting to think how to regulate crypto to, you know, very advanced regulators who have been doing it for a while already. So depending where you are in the world, the situation will be different. There are even countries in the world that have banned crypto, and ironically, they're finding themselves in a situation where they're exposed to risk even more, although crypto is banned in those jurisdictions. So going back to your question, absolutely, we're educating a lot. But it's very often it's not going back to basics. It's more like understanding what exactly is possible in the blockchain space. So, for example, if you look at stable coins, the beauty of it is that a lot of the activity is actually traceable or visible for everybody. It's just a matter how to look at it and how to analyze it. And that's contrary to traditional finance, where transactions are proprietary to financial institutions, right? Unless you're interacting somehow with them in that transaction space.
And I think that's for me, that's the real beauty. You know, I've also worked in the digital asset space in a crypto firm, and that's the beauty of digital assets. You know, the chain is immutable. You know, once the coin, the asset has entered into the chain, unless it goes through multiple mixers and the chain is broken, you'll be able to look right back to the inception of the actual digital asset itself. And as you rightly said, in TradeFi, that's not the same. They actually say that 1 in 5 20-pound notes in the UK has a trace of cocaine on it. But you wouldn't be able to know that by looking at it. Whereas on blockchain, you can actually trace ownership and association through the chain activity itself.
You could. So we're all like, I hear it all the time. Crypto is actually more transparent because everything is out there to be seen and analyzed. But the reality is that that's true for a lot of things, but not for everything. So regulators need to know what are the stopping points, after which we can't actually see what's happening. So they need to know both what's possible and what's impossible, and that will help them regulate in the right way. So I'll give you some examples. The trends that we're seeing is that, of course, speed of laundering is increasing. Just as we are learning how to trace crypto and how to kind of undo that transaction layering and laundering chain. So do the criminals learn how to bypass those controls and the analytics capabilities. And we are seeing that the speed is increasing. In about 70% of cases, if we're speaking about hacks, the money is gone before anybody actually reports it. The fastest incident we observed is about 4 seconds where the money was already gone. And the largest hack of this year, the Bytebit hack, which happened in the beginning of the year and accounted for something like $1.5 billion US dollars. We saw that criminals obviously had prepared extensively before the hack and actually set up all the network of unhosted wallets, and they strategized in advance how to do that, and that's why it was so successful, unfortunately.
But then if you look at the example of the Mt. Gox hack in 2016, what was beautiful about the advancements in blockchain analytics was by 2021, 2022, I think approximately 85% of all of the digital assets that had been stolen had been uncovered because of the advancements in blockchain analytics. So I think that for me is the really exciting thing is, you know, yes, of course, illicit actors will continually find new ways to launder and be more complex and sophisticated because they have the same tools and the same capabilities as we have. The only challenge is they can actually move faster because I wouldn't say hindered is not the right word, but we're reliant on operating within a regulated framework in certain areas, which means implementing certain technology. It can't, and also within organizations, it can't happen overnight. It requires staged and the proper due diligence and process to be implemented to test it in a beta environment before it goes live. Whereas, as you rightly said, in the criminal networks, they're operating at speed, complexity, and the minute they think, right, we've got this, they'll just hit the button and go, whereas we're still training our systems in the background to make sure that when they do go live, that they are effective and efficient and workable within the realms of our regulated responsibilities.
Absolutely, and obviously we are operating in regulated environments in the space governed by law, and the reality is that the laws don't yet exist in all jurisdictions, and crypto is international and it moves at the lightning speed across borders, while regulators unfortunately are bound by existent legal norms. And also they are not empowered by good enough technology, in the sense that not all regulators actually use blockchain analytics technology. And also, unfortunately, and I would personally suggest this as an idea, to standardize reporting frameworks and APIs, so that once one regulator that's already looking into this space knows about a criminal incident, the data can be instantly transferred to another regulator or the private sector even, And it's something that, for example, DFSA in Dubai is doing, whereby they have the threat information facility where they inform the private sector of the emerging threats. But the thing is that we need to do it faster and more efficiently, and the legal norms have to be adapted for that as well.
That maybe leads on to, so I was just thinking the question we had around regulators designing frameworks to support data-driven supervision. So I think you were going to talk about some examples around that.
What we're seeing is that regulators, where the space is already regulated, obviously, overseeing their jurisdictions in different ways using blockchain analytics. So one layer is the macro layer, where you can use blockchain analytics to understand what is happening in the market. It's what I was referring to before. Like if a tax authority wants to know how much revenue is generated by crypto firms in the market, they can know that using this macro level analytics. But also some leading regulators are already using blockchain analytics to understand the risk relating to crypto firms applying to be licensed, to registered in the country. And that's also something that we need to publicize around the world. You can mandate crypto firms to disclose their hot or operational wallets, and the risk relating to those wallets, all the activity going through those wallets, can be seen and managed both by the firm itself, but also by the regulator. And in that way, it's live, it's quick, and we can protect consumers in the country and prevent things like hacks from happening.
Sorry, Jane.
It's all right.
I had the absolute privilege earlier this year of going to the crypto conferences in Dubai, and I actually was taken by the police in Dubai, not for any bad purpose. They took me to show me around the facilities, the financial crime facilities, and how they're actually working in the background to investigate, for example, crypto-related financial crime, etc. And as you rightly said, it is phenomenal. And VARA is working incredibly hard as well in Dubai to make sure that they implement the right framework, which does appear to be slowly and surely kind of finding its feet, but it's not foolproof and timelines are challenging. But one of the things that I'm quite passionate, you mentioned hot wallets there and cold wallets, is one of the things that Dubai does beautifully is they differentiate between the use cases of digital assets. And in other jurisdictions, they just group everything into like one size fits all. And if we look at institutional investors, it's about it's market making, it's timely. It needs to be in a hot wallet environment, whereas for retail investors, for protection purposes, everything should be in a cold wallet environment because they don't need to operate at the same speed. And also it's about protecting the assets as well from potential hacks, etc. You mentioned there, obviously, the regulators in Dubai, obviously Singapore as well. It made me giggle earlier when you said about kind of, regulation. Obviously, we've been in the industry many, many years. I've been in the industry over 20 years, and regulation really only started around 2019. So it's like, for me, this is still like our new baby. It's still, and I remember sitting with the MAS back in 2015 when crypto firms weren't getting approvals for bank accounts. And they said, well, if we don't regulate digital assets, it's not a financial product. And it was only after the SEC enforcement action back in 2019 that a number of regulators, including the SFC in Hong Kong, changed their viewpoint on regulation. So there is a lot of gameplay happening in terms of catch-up. The MAS in Singapore and Dubai, in my opinion, in the UAE would be the most advanced regulators in our space at the moment. The FCA in the UK, it was an AML regime, which we all know was much broader and much wider. What it was missing was capital adequacy, whereas in Germany, it was if you want a license, you have to get a banking license. So they have the same requirements as an actual financial institution in respect of capital adequacy as well. So are you seeing many changes in the regulatory space happening around this and globally at the moment? And where would you say, if people want to see some of the best examples of digital use cases within regulation, which jurisdictions would you say to look at?
So I'm a big admirer of the FCA, also because I could see it from the inside. No, I had the privilege to be part of the team that was at the outset of the crypto regulation in the UK, accepting applications on behalf of crypto firms to be then registered in the UK. And yes, it was heavily AML focused. But I believe that's the foundations without which you actually shouldn't be able to operate as a crypto firm, as a financial institution-like body. So that's a very good example, and I actually admire the way the UK is progressing in this space. What I would say, there are different very good examples of how it can be done, and for example, Georgia is another example. I had the pleasure of training the National Bank of Georgia and the Ministry of Finance and the FIU in Georgia in relation to crypto investigations, specifically. So the regime in Georgia is very much supervision focused, and the way the country has regulated for the use of blockchain analytics even is admirable, because there are actually standards and requirements for blockchain analytics firms in the country. So there are different great examples, and you mentioned others, Dubai, of course, Bara, Singapore. But what I would say is that we're still somewhere on a journey to perfect cooperation, and unfortunately in the beginning of the journey, because for all of this to work very well in harmony cross-border, we need interoperability, we need regulatory interoperability.
Absolutely.
You know, stable coins regulated in one market need to be regulated in a similar way in another market for the transactions to go smoothly across border.
We won't even talk about the choice of the travel rule implementation, and exactly to that fragmentation, creating that inoperability across border. But you know, like with any regulatory developments, it's a very exciting time. I have to say, I don't think there's ever been a more exciting time in my career for regulatory developments. I think after the 2007-2008 crash, the industry became a little bit boring, if I may say, in terms of products. We stopped diversifying, and it's only now with the advancements of digital assets that excitement But one of the things in terms of incentivization, and again, going back to governance and oversight, and again, maybe this isn't a discussion for today, but in terms of reporting and oversight, we're still heavily reliant on firms to tell us we tell the regulator what we want to know. And I think we need to rethink how we do that reporting and oversight. And with the advancements of technology, I think we need to relook at how technology, how the regulator is integrated into the framework and the risk oversight of the firm. And instead of having this static reporting or push-through reporting, should I say, that there's more of a pull reporting, that the regulators can automatically pull the data to ensure that that oversight and risk rating is still consistent with their risk appetite. And I'd love to see that change happening in the industry, because I think it would be more effective and efficient for all of us.
Absolutely. I would go even further. There's not much need to pull anything where the data is already there, and it's live, and you can be alerted on a live basis on anything risky happening in relation to those supervised exchanges. So, for example, when we're seeing a sharp increase in sanctions-related alerts, the regulator can see the same thing and intervene.
Absolutely. And I think it's about timely reporting and information. And with the speed of the development of financial crime typologies, it's impossible for organizations to keep on top of this at the moment. And I want us to better mandate the how technology is being used in order to support the firms. If you look at HSBC is a perfect example. I know it's not obviously in the crypto space, but it wasn't until they implemented Google AI that they were able to identify complex networks in their books that no human eye could have identified. Most of our sanction exposures nowadays, it's not primary, it's secondary exposure, which is very difficult to identify because it goes beyond the RCA, family, close relationships and close associates. So technology is paramount to our success right now. And I'm really hopeful AMLA in particular is going to lift that gauntlet and run with it, because we need a defining regulatory force globally. I know that, to be fair, I think the DFSA do an amazing job here and the MAS, but we need much more advancement in the technical space and more integrated reporting mechanisms to make sure that our risk appetite continues to align with the regulator.
Yeah,
I agree with that.
yeah. That's always good. Yeah. Okay,
Permitting.
we're nearly out of time, I think.
Sorry,
But no,
sorry.
it's all good. But it's been really a pleasure to get all of your thoughts. Maybe we can finish on a bit of a personal insight, just in terms of if you could give one piece of advice to your younger self, or indeed maybe the new generation entering the digital asset space, what might that be?
So,
could be more than one piece.
In hindsight, right?
Yes.
But I would say, if you consider yourself to be a financial crime fighter, continue doing what you're doing. Don't give up. There will be, for sure, some days and some months and years when you will question yourself and will want to step away from this career. Yes, but don't give up. And quoting the late Justice Bader Ginsburg, I would say, if you care for something, continue fighting for it, but do it in a way that other people want to follow.
Brilliant.
There are different ways to interpret it, but I totally agree with that statement.
Okay,
It's beautiful.
fantastic, lovely. So it's been an absolute pleasure, Yulia and Oonagh as well. And we're going to hear from you later on today, aren't we, at the event as well? So
Absolutely.
later on the crypto panel. So
Thank you, Oonagh. Thank you,
yeah,
Jane.
thank you.
Thanks
Yeah,
very
pleasure.
much.
Thank
Thank
you.
you.
Yeah.